Martin Lewis, a well-known financial advisor, has highlighted a legal strategy to significantly reduce inheritance tax liabilities, potentially saving couples up to £200,000. In his recent podcast, Lewis explained that married couples or those in a civil partnership can leverage specific tax benefits unavailable to cohabiting couples. The primary advantage is that assets left to a spouse are exempt from inheritance tax, allowing for the transfer of unused tax allowances between spouses, effectively doubling the tax-free threshold when the second spouse passes away. This method is particularly beneficial for couples with substantial estates, such as those with assets totaling £1 million. The current individual inheritance tax allowance stands at £325,000, with an additional £175,000 available if the main residence is left to direct descendants, totaling a £500,000 threshold per person. By transferring assets and allowances to a surviving spouse, married couples can leave up to £1 million to their heirs tax-free, avoiding the standard 40% tax rate on amounts exceeding the allowance. This strategy underscores the financial implications of marital status in estate planning, offering significant tax savings and reinforcing the importance of strategic financial planning for asset protection.
Meta Platforms is reportedly considering a substantial investment exceeding $10 billion in Scale AI, a startup specializing in data labeling services essential for training machine learning models. This development, reported by Bloomberg, highlights Meta's strategic pivot towards artificial intelligence (AI), aligning with CEO Mark Zuckerberg's emphasis on AI as the company's top priority. If finalized, this would mark Meta's largest external investment in AI, contrasting its historical focus on internal research and development. Scale AI, founded in 2016 and valued at approximately $14 billion following its recent funding rounds, counts tech giants such as Microsoft, OpenAI, NVIDIA, and Amazon among its clients and supporters. The startup operates a platform that supports the exchange of AI-related information among researchers globally, with contributions from over 9,000 locations. It has generated significant revenue, projecting up to $2 billion this year, and is involved in military applications, notably developing the Defense Llama language model based on Meta's Llama 3. This potential investment reflects a broader trend of significant AI investments by leading tech companies, with Microsoft, Google, and Amazon also making large-scale investments in AI ventures. For Meta, this move could enhance its data processing capabilities, critical for AI development, and bolster its competitive edge as it seeks to establish its Llama AI model as an industry standard. The collaboration with Scale AI could also drive innovation and growth in AI applications across various sectors, potentially impacting Meta's market positioning and stock valuation positively. However, the exact terms of the deal remain under negotiation, and its final impact will depend on the execution of the partnership.
Senior U.S. officials are set to meet with a Chinese delegation in London for renewed trade talks, as announced by President Donald Trump. This development follows a positive phone conversation between Trump and Chinese President Xi Jinping, focusing on resolving issues related to tariffs and the supply of rare earth minerals. The U.S. delegation, including Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and U.S. Trade Representative Jameson Greer, aims to address the recent slowdown in China's export of these critical materials, which are essential for various U.S. manufacturing sectors. The outcome of these talks could significantly influence trade dynamics and economic relations between the two nations, potentially affecting global supply chains and market stability. In the corporate sector, the Michaels Companies has acquired the craft brands of the now-defunct Joann's fabric retailer. This strategic acquisition is part of Michaels' effort to enhance its offerings in fabric, sewing, and yarn, aiming to attract Joann's former customer base. Michaels' CEO David Boone emphasized the company's commitment to providing value and inspiration to its customers, seeing this acquisition as an opportunity to meet rising consumer demand in the crafting industry. The move is anticipated to strengthen Michaels' market position and expand its footprint in the creative retail space.
In May, China's export growth underperformed expectations, primarily due to a significant 34.5% decline in shipments to the United States, marking the steepest decrease since February 2020. Overall exports increased by 4.8% in US dollar terms, slightly below the forecasted 5% growth. While exports to the U.S. dropped, there were increases in shipments to Southeast Asia, the European Union, and Africa, rising by 15%, 12%, and over 33% respectively. Chinese imports also fell by 3.4%, surpassing the anticipated 0.9% decline, indicating weak domestic demand. The trade tensions between China and the U.S. continue to be a significant factor, with high tariffs remaining despite some reductions in May following a preliminary agreement in Geneva. U.S. tariffs on Chinese goods stand at 51.1%, while China's tariffs on U.S. imports are at 32.6%. Leading to a 41.55% reduction in China's trade surplus with the U.S., now at $18 billion. Future negotiations and agreements may influence trade flows, with some recovery in U.S.-bound exports expected in June, though analysts warn of potential tariff hikes that could hinder export growth later in the year. In the broader economic context, Asian markets saw gains driven by investor optimism over upcoming U.S.-China trade discussions and economic data releases. Key indices such as mainland China's CSI 300, Hong Kong's Hang Seng, and Japan's Nikkei 225 reflected this positive sentiment. Additionally, China granted temporary export approvals for rare earths, and Boeing resumed jetliner deliveries to the country. However, China's Consumer Price Index, CPI, saw a 0.1% year-on-year decline in May, marking the fourth consecutive month of deflationary pressures, raising concerns about the effectiveness of Beijing's stimulus measures. In Japan, the economy contracted less than expected in Q1 2025, with GDP declining at an annualized rate of 0.2%, an improvement from the previously estimated 0.7% drop, boosting market confidence slightly.
A significant legal development has emerged involving Reckitt Benckiser Group plc, RBGLY, as a class action lawsuit has been filed against the company and certain officers. The lawsuit, announced by Bronstein, Goertz and Grossman, LLC, alleges violations of federal securities laws, focusing on materially false and misleading statements made by Reckitt regarding its business practices. The core of the allegations is that Reckitt failed to disclose the increased risk of necrotizing enterocolitis (NEC) in preterm infants consuming its cow's milk-based formula, Enfamil. This non-disclosure allegedly impacted Reckitt's sales and exposed the company to potential legal claims, leading to misleading public statements about its operations and prospects. The lawsuit covers investors who acquired Reckitt securities between January 13, 2021 and July 28, 2024, and seeks to recover damages for the alleged misinformation. Investors have until August 4, 2025, to request to be appointed as lead plaintiffs in the case. This legal action could significantly impact Reckitt's financial standing and market perception, particularly affecting its Enfamil product line's sales and investor confidence. The outcome of this lawsuit may also influence Reckitt's future disclosures and operational strategies, as well as its approach to managing legal risks associated with product safety.
Speaker of the House Mike Johnson has downplayed the influence of Elon Musk on the Republican Party's legislative agenda, particularly concerning the GOP's proposed tax and budget bill. Despite Musk's vocal criticism, labeling the bill an abomination due to its potential to increase U.S. debt, Johnson emphasized that the legislation aims to support American families rather than appease wealthy individuals like Musk. The bill, which extends the 2017 Trump tax cuts and proposes spending reductions, has faced scrutiny for potentially leaving millions uninsured and increasing the deficit by $2.4 trillion over the next decade, according to the Congressional Budget Office, CBO. Johnson and other Republicans, including White House Budget Chief Russell Vought, argue that the CBO's projections are based on flawed assumptions, suggesting that the tax cuts will eventually spur economic growth and reduce deficits. However, historical trends during previous administrations, such as those of Reagan and Bush, show that similar tax cuts have led to increased deficits. The ongoing public spat between Trump and Musk adds a layer of complexity, as Musk has threatened to financially support opponents of Republican members who back the bill, though Johnson remains confident that voter sentiment will ultimately favor the legislation.
Lululemon Athletica, a leader in the athleisure market, has seen its stock price drop by 48% from its peak in late 2023, driven by concerns over valuation, slowing growth, and the impact of trade tensions. Despite these challenges, Lululemon's performance over the long term remains impressive, with a stock increase of approximately 1,800% since its 2006 IPO. The company's recent first-quarter earnings report highlighted a slowdown in comparable sales growth to 1%, with a 2% decline in the Americas. However, revenue rose 7% to $2.37 billion, aligning with estimates, and gross margin improved slightly, yet increased selling and administrative expenses led to a modest 1% rise in operating income, and a slight earnings per share increase to $2.60, just above consensus expectations. The primary pressure on Lululemon's stock stems from its revised guidance, particularly due to tariff impacts. The company maintained its revenue forecast but lowered its full-year earnings per share guidance, anticipating a 160 basis point drop in operating margin. Despite these setbacks, Lululemon's growth prospects in China remain robust, with a 21% revenue increase in the region and plans to expand beyond its initial goal of 200 stores. The brand's strong reputation and adaptability in a challenging tariff environment suggest potential for long-term growth. With a forward PE of 18, Lululemon presents a potentially attractive investment opportunity for those willing to weather short-term uncertainties.
The upcoming U.S. Treasury auction of 30-year government bonds is drawing significant attention from global investors, highlighting a growing reluctance toward long-term debt. The Treasury plans to sell $22 billion of these bonds, which are part of its regular borrowing schedule. This auction is especially crucial as it will gauge current market sentiment amid rising yields and investor skepticism. Recently, yields on long-term debt have surged, with 30-year U.S. Treasury yields reaching a near two-decade high of 5.15% last month. This trend reflects investor concerns over increasing government debt and deficits, prompting demands for higher risk premiums. The auction's outcome, including metrics like the tail and bid-to-cover ratios, will be scrutinized for indications of demand, especially given the implications for future government borrowing costs. The broader context includes Moody's recent downgrade of the U.S. credit rating and the fiscal implications of President Trump's tax and spending policies, which could exacerbate budget deficits. Additionally, the yield curve has steepened, driven by a rise in the term premium, indicating higher compensation demanded by investors for long-term lending. This shift is influenced by fiscal policies and geopolitical factors, with long-term yields likely to remain elevated despite potential Federal Reserve rate cuts. The auction's results will also be pivotal in assessing foreign investor participation, especially in light of the controversial revenge tax provision in the Trump-backed tax bill, which could impact foreign demand for U.S. debt. Overall, the auction serves as a critical test for the market's appetite for long-term U.S. government securities amidst ongoing fiscal challenges.
Treace Medical Concepts, Inc., NASDAQ, TMCI, is involved in a securities class action lawsuit spearheaded by the Rosen law firm, with a critical lead plaintiff deadline set for June 10, 2025. The lawsuit pertains to investors who purchased TMCI securities between May 8, 2023 and May 7, 2024. It alleges that Treace Medical made misleading statements about the demand for its primary product, the Lapiplasty 3D bunion correction system, and did not adequately disclose the impact of competitive pressures on its revenue. This lack of transparency reportedly led to financial losses for investors when the true state of affairs was revealed, prompting the company to pivot its strategy towards developing alternative products. The Rosen law firm, known for its proficiency in securities class actions, is encouraging affected investors to join the litigation, highlighting their successful history in securing substantial settlements in similar cases. This legal action could significantly affect Treace Medical's market reputation, stock price, and investor confidence, underscoring the importance of accurate corporate disclosures and governance. As the case unfolds, it serves as a reminder of the critical role that transparency and accountability play in maintaining market stability and investor trust.
The S&P 500 index is experiencing a bullish trend, recently surpassing the 6,000 mark and reaching new highs beyond the previous peak of 5,968. However, the momentum behind this rally is decelerating as the index enters a prior distribution area, suggesting potential volatility and choppy trading conditions throughout June. This environment poses challenges for investors, as both buying at these elevated levels and shorting the market carry significant risks. Analyst Andrew McElroy recommends a cautious approach, suggesting hedging long-term positions above 6,000 and considering short-term trades only if the index dips back to around 5800. The current market dynamics are shaped by technical indicators such as fractals, Elliott wave patterns, and DeMark exhaustion signals, which McElroy incorporates into his analysis. These tools suggest that while a clean reversal is unlikely, a topping process may be underway. Investors are advised to remain vigilant and adaptable, considering macroeconomic factors and market narratives that could influence future movements. As the market navigates these complex conditions, strategic positioning and risk management become crucial for maintaining a competitive edge.